Can review Monday session from 6/12/2017. S&P 500 ETF still in long-term uptrend, making higher highs, higher lows. Recent trend action is was going sideways to all-time highs. Failed at this big outside day and it's kind of back within this range. So market directionality is still unsure, but the big picture trend is still intact. I placed one trade yesterday that was BlackBerry, some BlackBerries in the tech sector. We got a big picture uptrend, kind of coming off a base. It had a breakaway gap here and was trending recently. The past couple weeks, we're just going sideways. Kind of had a failure test to break out all-time highs and close lower. So as a sign of weakness number one, we kind of got near that level again and closed way down off the highs. But the market overall was weak. There were a lot of tech stocks were really weak on Friday. Just keeping that in mind. What was my setup here? My setup was, we kind of had a little weakness in the background, kind of going sideways here. And we're getting below the 1, 2, 3, 4, 5, 6, 6 days low, previous 6 days low. So I was thinking we get below here with some weakness in the background. There could be maybe some follow-through move from Friday's weakness in the market. Also, just maybe a little pullback. Maybe not to the midline, but if this was the start of a backside of the move, we get swing to the other side of Keltner. So intraday, I saw we had lower high, lower low, lower low, lower high. And so, at this point, the wide range ATR and BlackBerry and the wide range day is like $1, so we haven't gone all that way. In retrospect, I could call this a chase. I just saw that we cleanly broke through the prior day's low on volume, and I was calling this a bear flag, so I entered right at the purple line. Had my stop up above VWAP around 81 cents, just above the prior day's low. And actually, I covered like right in here as we were making higher highs into VWAP. I covered like right in there. So if I just held this trade in the day, it would have been a small winner, but it would have been a winning trade instead of losing money. So but this losing trade caused me to put another rule. I mean, it's a rule that we talked about before, but I've got rules for I'm looking at the stock, what's keeping me out of a trade, when I'm going to get in the trade, and now it's like once I'm in the trade, what are my rules? And it's like, well, I'm either holding until my stop gets hit, or until the end of the day. And the only exception where I won't hold at the end of the day is if we have some kind of windfall profit and like a real measured move. Like if we had like gone about 50 cents in this already rather quickly, then I'd be looking to cover there. But that would be the only exception. So reasons to sell are measured move objective, or holding it to the end of the day, or my stop gets hit, and those are the only three options. I think that takes a lot of the thought out of it, and I can just sit and let the trade work. As far as setup, trigger, entry, the setup was, I stated that earlier, the trigger was trading below the prior day's low. My entry was a bear flag. I think it hit most of my avoid list. It was this gapped up, so that was good for an open. Wheels a gap down, go down. Wouldn't even really call this an opening spike. I mean, it's 10 o'clock. I mean, this could be argued this might be an opening spike, so I might be guilty of that there. But it didn't happen in like the first 2 minutes. It had clean swings, I feel. This definitely cove trade outside the prior 3 days range, which has been a problem for me recently. And yeah, so I mean, I feel like is after 9:45 outside the opening range low, 9:45 opening range low. So I feel like I followed all my rules there. Just honoring my stop and just letting the trade work. Would have been a small little profit today. Not the biggest trade, but if I get out, it's 400 shares. I mean, it's like $40. I'll take $40 instead of losing $30, whatever it is. So and anyway, I saw another trade along the same vein. I'm sorry, that was a bit of a windy explanation, long-winded explanation rather. So Pandora also, consumer cyclical sector was the big picture in Pandora. Definitely an intermediate downtrend, making lower lows, lower highs, lower lows, lower highs. So what's our setup? Is just kind of, had an inside day, try to break out their prior day, close way down, lizard tail, on some high volume. So just thinking your continuation below the past 3 days low. And so we had the line drawn. One of my favorite intraday setups. So this trigger is getting below the prior day's low, right here. So we make lower highs into the level, which is definitely one of my favorite setups. It's definitely a later in the day setup, but this is one of those situations where you could start to short in anticipation of the break, even though it's technically within the opening range low, though. 945 opening range low, though, would be right there. So the orange line. But we would still be within the prior 3 days range. So, this is one of those where, the rules, I think right at this purple line would be the ideal entry for that. You'd be willing to miss it, so break through and prior resistance becomes support, or, consolidation below the level, any of those entries with their stop up with the white line, and so that's about 10 cents, and if you hold at the end of the day, you make about 3 to 1. So that's one good trade meeting all of my criteria, all of my rules, and especially making lower highs into the levels, one of my favorite intraday setups. So anyway, there wasn't a lot of stuff that fit my rules from Monday, so I was really happy that my rules kept me out of shop. It kept me out of shorting shop. It kept me out of shorting Netflix. It kept me out of shorting Yahoo. All these different names I was kind of looking at, but just simply by following the rules kept me out of bad trades. Could have definitely traded BlackBerry better yesterday, but it's like carryover from Friday when I was long BlackBerry and long shop, and then the market kind of spilled over, especially in the tech sector. The thought process carried over with me to Monday. There's that fear, and it's just like, follow my plan. Have a plan, stick to it, and like sometimes that shit's gonna happen. But I was really, really concerned about like the open P&L that I had on Friday, and that I let winning trades turn into losers, which is like a cardinal sin. So definitely got to think about, like, once we get like I was up 2R in shop, like I got to move my stop to break even. Like I shouldn't have been in any other position besides a break even trade in both those trades. So just kind of like landing the plan on Friday. But just following the rules, man. I think that's the biggest thing. Just like keep following the rules and judging the process. Judging it on process every day instead of P&L, and that's the biggest deal. Anyway, head to the gym later.